Hi, everyone. Welcome back to another episode of VC TV, which is the venture capital TV from LATOKEN. Sorry. Today, we're going to talk about seed investment and early stage startups. It's a very interesting topic. And today, we have investors from Southeast Asia, we're from investors from US, India, Nigeria, and yes, that's all. I mean, fantastic session. I'm looking forward to ask many questions and also learn a lot from the session today. So before I start introducing the panel of panelists, let me introduce myself for those who may not know me. My name is Sunny Mohanty. I'm based here in Singapore. I represent LATOKEN in Singapore. So I've been hosting VCTV since the beginning of 2020, when the entire world went into a global shutdown. That's when we moved to a virtual platform for connecting our founders, our entrepreneurs, with the investors community that we have today. So yes, that's about VCTV. Okay, so now let's go with a quick round of introduction about our speakers. I'm going to start with my first speaker, as I see on my screen, Mick Tam from Kiplex. Hi, Mick. Welcome to VCTV. This is your first time coming and speaking on VCTV because of the topic today, which is about seed investments and early stage startups. Within your introduction, kindly let us know what stage do you invest in and what geographies do you cover. Thank you. Over to you.
Right. Thanks, Sonny. Thanks for having me. First time on VCTV. This is Mick from Michelle, a short from Cryptoexchange. We actually receive fund based in Malaysia, focusing on early stage from seed to Series A. But because Series A kind of deal differs by demography, as in you could have a low Series A in Asia, but a high Series A in China, right? So our focus is seed to Series A, and for tech companies in Southeast Asia.
Okay, perfect. And Michelle, and welcome to this episode of VCTV. Thank you so much. Great. Now I have on my screen Shailesh Shalvi. Hi, Shailesh. Welcome
Hi,
back.
Sony. Hi, Sony. Welcome back, and thanks for inviting me on VCTV. Let me just brief you about Xfinity VC. We are early stage. Enterprise tech focus fund house based out of Bangalore, India. We do early stage funding, basically in pre-series A and Series A, and our basically the check size is about 1 to 2 million to start with. And we are sector agnostic, but we look into the areas like AI, cloud infrastructure, AR, VR, cybersecurity, and things like that. And predominantly, most of our portfolio companies are operating out of Indo-US corridor with a market-facing team in Bay Area and product engineering and development, being carried out in India, specifically in Bangalore, Chennai, Hyderabad, and Pune.
Great. Thank you so much, Shailesh, for giving those stats for the speakers and viewers that we have. It's very important to tell our audience what stage you invest in and what geographies you invest in. Thank you so much for that. Next, I have on my screen from Nigeria. So he's representing a company where the representatives have spoken before, and he is going to be speaking on the topic today. Over to you now with your intro background.
Yeah. Hi, Sonny. Excited to be here. My lead operations at a venture capital company called Ingressive Capital. Ingressive Capital is focused on investing in innovators and entrepreneurs across sub-Saharan Africa. So we have our portfolio companies span from Nigeria, Ghana, Kenya, and this month we'll be investing in a company from Egypt. We operate at the pre-seed seed stage, at that really, really early stage where the entrepreneurs need some sort of backing to figure out their product market fit and figure out their customers. And we invest up to about $400K. I'm optimized to get about 10% out of that in equity.
Okay, great. Thank you so much for that intro, Vyam, and welcome to VCTV again. So, yeah, next I have on my screen Devang Mehta. Hi, Devang. Welcome back on VCTV. How are you today? A little bit of intro background with the kind of stages you invest in and the geographies you cover. Thank you.
I'm good, thanks. Hi, everyone. I am Devang Mehta, a partner at Anthill Ventures. We're an early stage speed scaling ecosystem. We invested pre-A and Series A across the globe with the differentiator of being a fund accelerator model. So we just don't invest, we invest and scale in early stage companies. Within Anthill, I handle the healthcare vertical. So along with HCG, which is India's biggest oncology chain, we scale early stage companies in healthcare and health tech with a primary focus on oncology and adjacencies, but look at all different interesting business models. And I'm based here out of Mumbai, India. Thanks.
Thank you, Devang, and welcome back again on VCTV. Glad to have you and hear your insights as well. So next I have on my panel, on my screen, Gary Fowler. Hi, Gary. Welcome back.
Hi, it's great
Hi.
to be here, Sonny. Good to see you again today. So my name's Gary Fowler. I'm a serial entrepreneur, and so I'm based in Silicon Valley. I've done 17 startups. I've been involved in 2 unicorns. I was on the original management team at Click Software, which was sold to Salesforce for $1.35 billion. Also, I'm the co-founder of Viva, one of the top AI HR tech, another unicorn that we co-founded 4.5 years ago. I invest. I started the first accelerator in Russia. I lived in Russia 14 years. I also started the #1 private corporate accelerator, GBA. I write a lot. I've written over 120 articles now on artificial intelligence and quantum computing. I just wrote an article on the quantum internet this week. What else? I love AI and quantum. We're investors. We're a venture studio. I'm the CEO, president, co-founder of GSD Venture Studios. I almost said GVA, which is my company in Russia. But GSD is Get Shit Done Venture Studios, and we're curating AI and quantum companies from around the world using Silicon Valley support to take them out and build unicorns.
Wow. Excellent. Building unicorns and going global. GST Ventures. Thank you so much, Gary, for that intro and background. Last, I have on my screen Rishabh Gupta. Hi, Rishabh. Welcome back again.
Hey, Sonny. How are you?
I'm great. Where are you sat today? Are you in the middle of road or something?
Yeah, I'm in at the moment in Dubai, and so I was coming out of a meeting. It got stretched. That's why I had to stop in the middle way to take this discussion.
Right.
I couldn't find a feature to change my background screen, and that's the reason you're going to see some good views.
Yeah.
Anyway,
Swimming pool on the back.
yeah. So I'm at the walk in Dubai right now, JBR. Yeah, so thank you so much for having me. And again, like we met just 24 hours ago. And Gary, it's been a pleasure again to be here with you. I think it's our fourth or fifth. It's a fourth or fifth panel discussion together, right?
Yeah, no, it's great.
Yeah.
Great to see you again. I love your
Yeah.
background. It's great.
So not taking a lot of time. Yeah, not taking a lot of time for the panel. I am working with O1X. O1X is a family office based out of Dubai. We invest in early to growth stage companies. We call ourselves as a strategic investor. We not only invest with capital, we work with those companies. And as Devang rightly mentioned, it's about scaling, providing the capital and scaling up the businesses. That's what we do. In India, we run an accelerator, technology accelerator called Infotech Hub that provides an ecosystem to any early stage venture. But to begin with, we provide them a check size of close to $1 million, half a million to $1 million. Then providing them the ecosystem of technology partnerships, And at the moment, we are working with a acceleration program for DeFi ventures. It's called TDFi. We are investing in early stage blockchain companies that are working in the decentralized finance space. Right now, I'm in Dubai for the Global DeFi Congress that is scheduled to happen on 10th of February. It's the largest event that is happening in the world at the moment today in this pandemic situation. More than 100 plus investors. That includes who's and who's of the funds will be there to invest, and we are co-hosting that as well as going. We are also investing in the startups that are coming there. So yeah, quite happening times. I mean, I don't know, crazy times in terms of Indian startups, in terms of blockchain. It's going amazing for me right now.
I
So
know,
looking
crazy
for
times for blockchain and crypto for sure, right?
yeah, yeah, definitely. So looking forward to the discussion, and thank you again for having me here.
Thank you, Rishabh. And yes, we'd love to hear your insights as well. So today, panelists, we also have a founder from Russia who is going to be pitching his startup. So he's here as well, Ivan. Hi, Ivan. Welcome to VCTV. Are you there? We can see you on our screens. Yeah, please switch on your cameras and introduce yourself. Okay. Hi, Ivan. Can you hear us?
Hello.
Hi. Just a quick intro before we take the questions from the panelists and then move to your session. Okay. I think Ivan is still not ready. Let's start with the questions for the session today. Before that, I would like to give a little bit of perspective on the topic today. We're going to talk about early stage startups, early stage investments. So 2020 was undoubtedly a year of challenges, as we know, for the early stage investment market. However, as every entrepreneur knows, challenges bring opportunity. And while there was plenty to bemoan, the year ushered in a number of much needed changes that will ultimately benefit every player in the industry in terms of growth, businesses, investors, and all of the organizations that serve them. So, what about early stage investments? The space has been very slow because obviously we are going to talk about technology on this panel. Because of the technology, because of technologies like Zoom and live stream platforms, we're able to connect to each other. Are slow. I think early stage investment space have been slow to adopt digital, believing that raising capital is all about relationships. Because I have heard from all the past investors are talking about closing a deal on Zoom was obviously unthinkable prior to 2020. So it was all about relationships and meeting in person. So therefore couldn't benefit from online tools. 2020, as we know, the year quashed that idea. With in-person meetings difficult at the best of time, networks needed a mechanism to facilitate investment. Digital platforms which provide always on access to information for due diligence, investor founder Q&A, and analytics that make clear with deals that are generating the most interest are quickly becoming can't live without tools for investment networks. So yes, so let's talk about what is early stage investment, what are seed funding tips and tricks, how digital platforms like this, be it Zoom, be it Skype, be it any streaming platform, has helped fundraising in the last year and how it's going to be the new norm going forward. So I'm going to start the question to Michelle. Hi, Michelle. So tell us, what's an early stage investment all about? And yeah, let's start with that.
Right. I guess it's good to define like early stage, right? Because it really differs by the demography that we are looking at. So in Southeast Asia, primarily, we're really looking at something that you have gained business traction. So it's not just an idea. So you must have launched, and depends on like half a year or go up to a year plus. But you got to show a certain level of revenue. Profits not necessarily, and your product market fit, that's That's compulsory. So for our standard, that's where we're looking at when we benchmark early stage. But during the pandemic time, we also see a little bit of trend whereby you would have startups that have reached Series A, right? But because of the pivot that's necessary, because of the bigger environment, so they need to go through like substantial pivot to change their business. So essentially, that makes them as good as a seed round business. You see, when they raise the round. So that sort of redefine seed stage investment in a bit for us.
Right.
Yeah.
Great start. Great opening remarks about there, Michelle. Thank you so much. Next, I have Shailesh. Same question. How do you define early stage investment?
Thanks, Sony. I think early stage investment basically in India has, taken a very deep root, and now it's being a part of a normal life or normal career, because a lot of, students or even experienced professionals, they're turned entrepreneurs now. And generally, there are certain signages we normally look at, although we look at, enterprise tech or B2B on the startup side. But generally, there are some few signages we normally look out for while evaluating that particular startups and how the idea may be a good one for scale up. So first, let's start. I mean, I'll take about 5 minutes. I think let's start with the problem solving statement. What is the problem solving statement? Is it a sort of a painkiller or sort of a vitamin? And the most important part is how Xfinity can contribute to the business. Because although, I mean, there would be a startups who would be approaching us, but there are certain areas where probably, Xfinity cannot contribute too much. Then probably I think we decline that proposal. Frankly, we say, I mean, we can't contribute much to your business. Please, go to other particular counter. So as a VC or as an investor, it is very important as a practitioner fund driven, whether you can able to contribute positively to the business. And the second, I would say and the second point is basically the TAM, the total addressable market, how big enough it is, whether it can accommodate more than 2-3 players. Then comes your MVP in place, whether it is undergoing some pilots, and although the company may be a pre-revenue, but a product has to be in place, because we don't come in at a idea stage as such. And important point we normally look out is the founding team. Whether the founding team is well-rounded or each member's skill sets are complementary to each other, then their number of years working together, and whether their interests are aligned with each other. And the most important part is whether they are open to hire leadership team, including a CEO, in order to scale up the startup from the idea stage. And there are some other factors like whether they are flexible enough for a pivot during the product market fit. Because until and unless product market fit is established, you generally cannot grow at a J curve. And we feel that probably the startup journey is not a linear one, but is that of a ladder one. Each step has got certain milestones, and at that particular milestones, the commensurate fundraise can happen. And ultimately, the startups or founders should look out for a positive, I would say, unit economics, and a good and healthy high gross margin, maybe around 70-75% plus, and a J curve or sort of a hockey stick shape projected revenue. And generally, enterprise sales, I mean, the startup which normally we fund are basically selling to the enterprises. So enterprises sales are long cycles in nature. So a need to rope in a GTM or a channel partners who can open the door quickly is the paramount important. And obviously the last point is, I would say, how are the exit opportunities? Who would be the buyer for the businesses going forward? So I think the founders should also take that into consideration while basically fetching I would say, the fresh check of institutional investor first time in their pitch.
Wow, what is the time duration from starting a bootstrap startup, taking a pre-seed or a seed funding till exit period?
It generally varies. There are some startups where probably they raise a seed funding, and then they raise the Series B funding or Series C funding within, I would say, within 24 months. But generally, on an average, a startup from an idea inception till I would say, getting into full-fledged businesses, generally it takes a process of around close to around 3 to 5 years
Right,
minimum.
3 to 5 years. Great. Okay, thank you. Thank you, Salesh, for that information. Next, I have on my screen Hi, over to you. Same question. So, early stage investments. How would you define that?
In respect to Africa, where we are, it's quite different. So, early stage investing in Silicon Valley and India, well, it's slightly different to what we have obtainable here in Nigeria. At the early stage, we expected that you already figured out product market fit, you already have a product in the market, and you're just raising money for expansion. But at the stage where we operate, which is the pre-seed seed stage, we look for post-traction startups, which means you have your idea, you're already going out there to validate, you've built out your prototype or your MVP, you're figuring out your product market fit. We don't expect you to figure out everything at once. And you have the team and the skills to actually build your business such that if we invest in it, there is a probability of returns in the coming years. So yeah, it's quite different, and I like that on this panel we have different experiences from different continents and from different countries. Yeah.
Okay, great. Good to know about what happens in Nigeria, because obviously it's going to be different from India and of course from Silicon Valley. Thank you so much, for that insights. So next I have on my panel Devang. Hi, Devang. Over to you with the same question, please. Thank you. Devang, can you hear me?
Yeah, sorry, can you hear me?
Oh, yes, yes.
Yeah, seed investing, as a lot of people said, it differs a lot by geography and even industry. But in India, is generally understood to be the first institutional round. Seed equal to pre-A equal to the first institutional round. So it's the first round after friends and family, right? It's like a set of people that come in basically on your cap table after friends and family, essentially.
Right.
That's the way I see it. What do we look for? I think at pre-A, there's so many things that are going to change in the startup's life. Really, the only thing that remains, or at least we hope to remain constant, is the team. So we are big fans of team. Business model and TAM and all, of course, has to be there. I'd say it has to be thought through more than because few startups end up doing exactly what they say in the first pitch. They have to pivot. Markets change, technologies change, regulatory structures change. So I think as long as you have a solid team with complementary capabilities and something that's well-rounded, at a minimum one business and one technical co-founder. Ideally, their affinity should stretch back quite a few years so that they're comfortable with adverse and difficult scenarios and how to sort through them. And all the basic first elements should be in place for a investable company.
Right. And if I remember, you invest in India and Southeast Asia, right?
Yes, India and Southeast Asia primarily, but we do invest globally also. Yes.
Globally as well. Okay, perfect. Thank you so much, Devang. So next I have on my screen Gary. Gary, over to you, please. Thank you.
Yeah, sure. So, remember, I'm a country boy from Pennsylvania. I grew up a little village of less than 500 people, so we try to keep it simple. And so from my standpoint, again, it's product market fit, it's having some first revenue, but the most important thing is the team. And I look for really balanced teams. I look for people that have incredible marketing expertise and operations, people that are charismatic, because especially now during the Zoom age, right, you need to be able to portray an image online. So it's important to be able to do that. It's important that the person has some type of credibility. So writing a lot is important. Visibility is important, because what's the first thing that happens? As soon as you start to talk to somebody, they Google your name.
Right.
And they go to LinkedIn. So you better have something out there, some meat out there they can look at, because if you don't, nothing good's going to happen. Passion. is important. I did a TED talk, a TEDx a few years ago exactly about this. So passion, I call it POV, passion, optimism, and visualization. You need to be able to visualize where you want to go. So, we look at it 3 stages, and I've actually written about this in Forbes. So stage 1 is really, I call it acceleration. That's a point where you've got your product market fit, you've gone through the ideation, but more importantly, you've done some customer development and you've got some revenue paying customers, or you've been able to go and get some interesting pilots. Stage 2 is regional dominance. So whatever continent you're on, whatever country you're in, so if you're in India, Russia, the US, Europe, you've actually got sales. Because my feeling is that 80%, if you've done that, there's a high probability that 80% of what you've done will be able to transfer on a global basis. And so what is the final goal? The final goal is some type of liquidity event, some type of exit in whatever way, shape, or form. I had a conversation, I don't know if you know Slack, but I had a conversation with Stuart Butterfield. We were at Stanford University, I guess about 2 years ago, and he was speaking. I actually had a chance to talk to him. And we talked about Slack. He said, Gary said, we almost went out of business. He said, Slack was totally different. It was into gaming. We developed this tool in-house. He said, I didn't have anything else to sell. So we started to do that. And he said, I had to fire a lot of people. And he said, I hope they held on to their stock. So look at it today. Slack was sold for billions of dollars. So it's having the grit, having the determination, because it ain't easy doing a startup. With Eva, my company, even with a billionaire partner, I had to pivot the company 3 times. 3. We started as a Google-like search to personal cloud. Great, had 167,000 customers, but, and they liked it. But the thing is, we couldn't transfer them over to pay because they're used to getting things for free from Google. Of course, Google's not really free because they're getting other things from it. Then we did an assistant, right? A smart assistant. Great idea, same kind of patents, same technologies. The problem is, again, people didn't want to pay for it. And I had to pivot the same company to do HR tech and AI and using it for retention and that kind of thing. And it took off. The pandemic, at the beginning of the pandemic, my business is up 38x. So, part of it's, and another part of it is luck, right? Luck is a major ingredient. So you stir that in the pot with the team, you stir that in the pot with experience and visibility, and that's how you create an incredible company.
Perfect.
By the way, Sonny, I want to say one thing. We talk about unicorns, but it's really odd for me because unicorns are mythical creatures. They don't exist. And we talk about some kind of thing with a horn and a horse, but once you've done a couple, you understand it's something else, right? It is a horse. It's a thoroughbred, but it's not a mythical creature. It's kind of odd.
It's not a mythical creature. Thank you, Gary, so much for that. Okay, next I have on my screen Rishabh. Rishabh, hi, over to you, please, with the same question. Thank you.
Yeah, thank you, Sony. So, we are running an accelerator. So for us, or rather, this would be a more common definition. Any startup that is in a stage where they haven't started making revenue, but they have identified their market. They have done their MVP of the product. They have done a proof of concept. For me, any startup that has stood out in a cafe, showed his product to 100 people and took his feedback has done the product market fit, has understood how the market is reacting to the product. And that's what comes under the seed stage startups for me. And that's where we come in. This is a startup which not only needs capital, they need strategic investors. They need investors who can also bring some value addition to the table. Right. So if you're working, for example, I'll just take an example for one of our portfolio projects called Clensta International. Clensta is building waterless solutions and was identified as the top 20 startups by our Prime Minister of India to fight COVID. So we are an early stage investor in Clensta, and when we came in, so apart from the capital that was given, about the deal, we brought in some strategic value. We had a marketing setup we had a team that was taking care of the product marketing in the entire Indian subcontinent. And from there, we work together. These two teams work together to spread to establish the network of people, network of their product, right? And that's the strategic value I'm talking about. Now it's not only the capital that came in; it was the market, it was the marketing, it was the product outreach that came with the capital. This startup is this is what I call a seed stage investment. So I think any investment that involves money and some sweat, right? Sweat in terms of the efforts of that investor is the seed investment. Anything beyond that is Series A or any. It's just simple venture capital investment. So yeah, that would be the summary of classifying seed stage investments.
Yes, perfect. Nicely explained, Rishabh. Thank you so much for those insights. Okay, great. Let's move on to the next question that I have. So basically, you can follow us on Facebook. You can follow us on Twitter, LATOKEN. So yes, just wanted to say. So what would a VC want to see in a term sheet? Let's start with Michelle with that question. Michelle, so as a VC, what would you like to see in a term sheet?
Right. Okay. So I guess there are many angles of looking at this. So you're looking at the deal terms, right? So
yes, please. Yes, deal terms. Yeah.
Right. So for us, I think most importantly is what's the instrument that we are using, right? So and for Southeast Asia, the common ones, if it's not a price round, then it will be a safe note or a convertible note, just like how they do it in YC. Alternatively, our preference will be the preference shares. So definitely not the common stock or the ordinary shares, like how we call it over here. That is the first. Secondly, dividends are not a priority for most investors in Southeast Asia, but liquidation preference are definitely one, like the second most important things that we look at. Participating liquidation preference or non-participating, that is one very important. And in terms of the liquidation preference, we also look into the ranking, the seniority ranking of the preference shares when it comes to the early round investors or the later round. So it's not necessarily that the later you come in and then there's more senior, but more about what's the profile of the early investor, right? So sometimes the profile is like a huge one, so the status quo sort of change even if we are the later round of investors. So I guess there's so many things to talk about, but I guess I will limit it to these two being the most important for us, like the primary and the secondary.
Thank you, Michelle, for that. I mean, yes, we are not going to cover all the factors, but yes, we can't on this 1 hour session. So thank you for sharing those. Salesh, over to you, please, with the same question. As a VC, what would you like to see in a term sheet? Maybe top 5 or top 3 you choose.
Sure. I think I would say in the other way around that what startups should avoid using in their pitch deck. Certain signages which are really VCs take it very negatively. So if they could try to avoid those signages, I think they can get a better audiences. So I would say a single founder is strictly no. I mean, no VCs. I think from our end, normally, if it is a single founder, we simply pass it. Then there are businesses like a Me Too businesses without any tech moat. And typically, generally, whenever there is no tech mode, we don't encourage such businesses. And also the purely services businesses or even lifestyle businesses, we normally avoid. Then businesses which are predominantly selling to only governments, that also I think startups should try to focus more on non-government businesses. And I would say founders should be very I would say conscious about the cap tables. Any cap table where founders are holding very marginal stake or highly diluted stakes, I think VCs would be very apprehensive taking forward. And I would say the last point probably I think I can think of is basically a customer acquisition strategy, Whether it is out of, purely a capital burn process, then probably, yeah, I think founders need to be very conscious on that front. They need to have a proper GTM, policy in place before pitching it to any VC as such. I think this is in short probably from my end.
All right. Yes. Perfect. Thank you so much for sharing those. So entrepreneurs and founders, there you go. Thank you so much. So next I have on my screen. Same question. As a VC, what would you like to see in a term sheet?
So before I even talk as a VC, I'll talk from the aspect of the entrepreneurs, and I always tell startup founders, ensure that somebody that has knowledge in legal terminologies, especially around VC, is reviewing these term sheets with you, because we find so many founders on the continent getting burnt. For Ingressive Capital, there are certain terms in the term sheet that we really like to focus on. Pro rata rights, we want to keep pro rata rights, which means we want to be able to invest in future rounds just to ensure that our ownership of the company is maintained. Definitely we look at the valuation. Typically we kind of do at the post-money valuation instead of a pre-money valuation. Looking at valuation in these perspectives are quite different if you're using a post-money on a pre-money, so sorry about that. Then liquidation preference too, that's just another thing we try to look out for, because we want to protect our investment and protect the upside when there's a future fundraise. So I'll leave the rest for everybody to talk about.
Sure. Great points there, So next I have the same question for Devang.
Yeah, I think a lot of it has been covered, but we want to make sure that our investment at least is not subordinated to any other investor, both prior or in the future. So it ranks as, preferred stock. Convertible preferred stock is the medium of choice. There's also, we want to make sure that founders remain interested in the company in the future. So, the equity vests over a length of time that ensures that they continue to accrete value to the company. I think someone mentioned participating preferred. I think that is rare now in a lot of geographies, because it's viewed as highly unfavorable to the entrepreneurs, viewed as double dipping, so as to speak, where you participate as preferred and then also as common. So I think we want a term sheet to be fair. We of course want, it's a business deal, so we want it to be favorable for the GPs and for our LPs by extension. We don't want it to be don't want to force something on the entrepreneurs that they regret having signed later and lose interest in the company, because you might own a lot of a company with a lot of rights, but if it goes to zero, it's a lot of zero. So you want to make sure that everyone in the ecosystem, LPs, GPs, entrepreneurs, employees, ESOPs, consultants, is rightly aligned with growth, because that's the only way you're going to create value for everyone. So the term sheet should reflect all of this.
Right.
It should also reflect that it should make sure through provisions on sale of assets and things like that, there's no maverickal behavior by the entrepreneur. They stay true to the task, which is execute on the business plan that has been signed off on.
Great points, Devang. Yeah. Next, I have Gary on my screen. Gary, same question. A term sheet. How should it look like for an entrepreneur also for a VC?
Yeah, so a lot of what, I don't want to reiterate and go through what everybody else has said about liquidation preferences, et cetera, but I'll tell you what's really important from my standpoint. I look at the employee stock option pool. I want to make sure that those companies are actually shared, that it's a win-win across the board, because the last thing, as Devang had said, is that don't want to get in a situation where that particular executive, but those folks feel like the founders feel like they're employees, not as founders of the company. You want to make sure that they feel that they can really manage through it. Sometimes people don't think about it, and you get founders that actually have really lopsided employee stock option pools. They don't want to share the wealth, and it's not good because it doesn't build that team spirit. So it's really important from my standpoint. And of course, when you're going, so the liquidation prefaces, whether or not it's a safe note or a convertible note, I mean, those are all just, part of the deal. But the idea is, are they going to treat people fairly? Do they have the valuation right? I mean, I've seen lopsided valuations up and down. They don't have the value of the company at the right level. It's too low, and I've seen it incredibly high. So really pegging it so that it's right. And I've seen investment bankers that I've worked with that have also pegged it. I've seen it from 20 million to 500 million. So, I mean, that kind of a spread. So people say, well, how can it be? It can't be like that. I mean, it's just because in your early stage company depends on who the team is. Have they had successes before? Do you believe in it as a hyper growth marketplace? And then if that's all in case, then you get this herding mentality where these investors, and I happen to be one of them on some pretty big projects, start coming in and investing, right? It's like a herd. Hey, Gary, do you want this deal? Here, we can have this. We can have this company. Why don't you get into it? And that's how it really works worldwide, by the way. So, so the most important thing is for me is, are they going to have, is there enough, if there's a 15 to 20% of the stock allocated to an employee stock option pool so you can reward people for success, so you can build that camaraderie and get them to stay around.
Right. Got it. Great point there, Gary. And for those who are listening, this is a very important point to be noted as well. Thank you, Gary, for that. So next I have Rishabh. Same question. Then we move to Ivan for his presentation.
Yeah, I think most of the points have already been covered. So, I mean, rather, I'll just quickly, say three things that I personally look for when we are finalizing the term sheet. One is the cap table. It's very important to understand who are the investors who believe in the product and who are the early investors, because they define the journey of the product till early series, right? Early investment rounds, and that's important to understand. Then second is, yes, exactly what Gary said, the ESOP pool. It's important that if whether the startup is ready to share the wealth with the teammates, that keeps them motivated enough to be there in the company with the organization. And the third, which Devang pointed out really well about the vesting period, it's we really look for the founders who have a skin in the game for a long run. They are not there for, I mean, yes, definitely serial entrepreneurs is the talk of the town, but people who are there for making money and just running away from the company often creates a lot of problems for the investors. So vesting schedule needs to be structured in a way that keeps the founders, the skin of the founders in the game for a good duration, so that when the company is growing, it does not faces the challenges of having conflicts with the founders. So yeah, these 3 points are the major things that I look out for in terms of.
Excellent. Thank you so much, Rishabh over there. Let's move to Ivan now with his presentation. And Ivan, let's make it interactive. So if you're presenting a slide and our investors have questions, let's take the question. Thank you. Please share screen button. Use the share screen button at the bottom.
Hi everyone. My name is Yulia. I'm going to be here with Ivan. I'm the CEO of the project, so we're going to share the screen right now.
Thank you.
So just one moment. So I'm going to stop with the question. If you have any questions, just stop us and we're going to answer, if that's okay. No. Can you see our screen?
Yes, we can.
Okay, that's good.
Okay. Hi everyone. Happy to join. One second. Hi everyone. Happy to join you today. I'm going to present your platform for business management, IBV.com. Today, entrepreneurs have a request for systematically development their business based on data. Now, business management look like this. I would like to present your revolution in business management from ABV.com. It's the first solution in the world that helps managing IT business service in one window, as well as automated and manage RPA scripts in one place. The solution consists of two parts. It's an aggregator of analytical metrics synchronized with our RPA system. There are only 4 steps of business development for our client. Client analyzes his business using our system and receive a personal instruction for business development. ABV certified freelance will help entrepreneurs solve the task he has difficulties. Then entrepreneur control business metrics and automated scripts in one centralized place. Automation scripts run on separate offline or online machines on OS Windows. Create robots without code yourself in few minutes. Increase efficiency towards routine automation. Please pay attention. We are not CRM, BI, ERP, etc. We are meta platform, aggregator of business service function or in one place management. Oh, sorry.
Any questions? Any questions?
Yes, Ivan, this is Devang. A couple of questions. You went through the first few slides pretty quickly, but it wasn't, I think, can you just explain a little bit? First of all, this is a SaaS tool, right? It's cloud-based, correct?
A cloud-based platform.
Yes.
Yes, it's a cloud-based platform.
Okay. Can you?
So yeah.
1 minute, please.
So it's a hybrid. It's a cloud-based platform. It's an RPA and online business account. So it consists of 2 parts.
RPA offline computer.
When you say hybrid, is it cloud-based or is it on-premise? I mean, where does it reside?
It's also like a cloud-based if we talk about the online business account. So it's actually an aggregator of 2 parts. So we have an RPA system, which is not a cloud-based. It's an RPA that you can have on your computer. And it's also an online business account, which is a cloud-based platform.
Okay. Who is your customer within an enterprise? Is it the finance function, the operations function, a product line?
In the next slides, but it's small and medium businesses, and we're also targeting like large enterprises. It's going to be here, right? Yeah, somewhere. Okay. Yeah.
Okay.
So we're going to continue. We're going to get understanding. Yeah.
Okay, let's continue.
Okay, thank you.
Oh, 1 second, please. Так, окей. Так, секунду. Что? Так, секунду.
Yeah. So is everything okay?
Yes.
Sorry, we just lost where we
yes.
Here, right?
Okay. We don't have direct competition, but have industry and direct ones. It's important to mention that we offer a complex solution. We are dealing with clients' problem faster, cheaper, more systematically and efficiently. We have several revenue streams and small checks from commission and subscription, bigger checks from retail chains and franchise. As an addition, big checks also come from partnership with tech company. The revenue in the four quarter.
Hey, I have a question. Can you go back to the previous slide?
Yes. So Ivan, they have a question. Yeah,
sure,
this slide.
Okay. Yeah. So
what is the question?
What do you mean? What do you mean by what exactly does you mean by saying that you have a check from $50 to $10,000? So is this the pricing model that you have that ranges from $50 to $10,000?
check it. Yes, so we have different types of subscription. That's why we put this like pricing here, because like the smallest subscription is $50 per month. It's for the smallest businesses, and the 10,000 check it's for like large corporations here, for example, in Russia. So we have the subscription yearly.
Yeah,
Yes, it is. Monthly subscription, $10,000 for like large
one deal.
corporations. So it's different if we talk about different segments. If we talk about small businesses,
Okay.
or like
Okay,
large.
so would you be able to share later? I mean, after this presentation gets over, the services offered under different plans, because this is a wide
Yeah,
variation from $50
right.
to 10,000,
Okay.
right?
Yeah,
So we would, yeah, all right.
yeah, sure. We will share the business model with you after the show.
Okay.
Let's go back.
So yeah, let's move on. Thank you.
Okay, thank you. Revenue in for quarter of 2020 is $11,000 from sales. MVP concierge. Average increase is 15%. The blue trend line revenue is our project growth in 2021. We are entering the massively growing BI and RPA system markets. We expect 3 million paid users by 2025. Major Russian media write about us. We will able to achieve the result without talking about science in just a year. We become best in Russia and got into Guinness Book records as winners of largest hackathon in the world. Also, we are feedback graduates. Thank you. We implement our solution in the process and providing software to business clients. Before we provided in consulting in professional software. We became best and created the platform for business development. We are looking for $500,000 investment to enter the US market, and YC acceleration program in YC acceleration program in 2021. We have a professional team and developers and sales management with great background. Please meet Yulia, CEO of ABB, who will help me answer questions that you may have here in my context. Please feel free to reach me out for additional info. Thank you very much.
Thank you so much. Now let's take the questions. You can stop the presentation so we can have an interactive session in terms of question and answers. Thank you so much. Yes, any other questions from any other speakers here?
Hi, Ivan. This is Shailesh here from Xfinity. If you could just throw some light on your customer acquisition strategy.
Can you please repeat, because we were like closing?
Yeah, how are you going to source your customers? If you could just elaborate on customer acquisition strategy.
So how are you going to acquire new customers? How are you going to acquire new clients?
Yeah. So right now we have around 6 warm leads, in our accounts, and we're working on getting some new traffic right now using some marketing instruments. But for now we have warm leads. They come from our network, and Ivan worked with like offline business before without technology, and we get some clients from there because he provided some IT and consulting services before. So they know him, they come, they bring some network, so kind of like this.
Okay. Any other questions?
Hi, Ivan. I just want to clarify who writes the code. Do you leverage on open source or everything is written in-house? Do you have ownership of that?
We have a website. It's an open source. And,
no, the code, what makes it, yeah.
На чем, на базе чего?
Да,
Скажи Laravel и Vue. Laravel на бэке, скажи. Laravel for back and Vue and front.
He's talking about the code, like but it's not an open source. No.
Okay, fine.
Sure.
That's
No.
And why would that be? Sorry, just intrigued. The code part. When was there any reason you would like to know that? Open
yeah,
source.
because you want to know if the code is written in house and they have IP for that code. You don't want to scale a business over an open source software where somebody comes to claim ownership and say, "Hey, I wrote this and I dumped it on GitHub and you took it and made it into a business," right? It's
Got
just
it.
we're just the risk.
Got it. Got it. So yeah, so that's the rationale behind the question. Thank you so much. Anyone else has any other questions? Please feel free to ask.
Hello, hi, this is Meg from Cryptoexchange. I actually would like to circle back to Devon's question earlier, like just to understand the product a little bit more. So which function within the business that this product is best suited for? Because we understand that, small company, I mean, it's easy to understand, but when it applies to big corporations, it can be really complicated, right? So maybe let us know more about the product functions.
Yeah. Okay, so we have different parts in the product, and maybe we didn't explain it perfectly, but so the first part, when you get into the platform, you have some requests. For example, you want to expand the number of users, or you want to have another website for your company created. So the first part of it is helping you with the metrics, because we have our analytical system, which you can upload your data to, and this is commonly used by corporations, actually, because it's very hard for them to have all the data in different websites, in different windows, links, and everything. So our tool helps to keep everything in one place, in one window on our platform. And then we have this RPA system, which also is used a lot by corporations. And the last thing that I need to tell you, and maybe we didn't say anything
Okay, I think the connection is a bit
about that.
steady. Or is it me? I don't hear you, Ivan, anymore. Hello? Is it me?
No, it's them only. It's them.
Okay, so they've frozen on us. Okay, so I think they're coming back. Yeah, we lost you.
Can you hear us?
Yeah, we can see you. We lost you for a few seconds. Any other questions, please?
Sorry?
Any other? Sorry. Yeah, we can hear you. We can hear you now. We lost you in between for a few seconds, but we can see you and hear you now. Don't worry. Any other questions from anyone? Rishab?
Sorry?
No, not at the moment.
Okay. So
can you hear
probably
us
when
now?
I have the business, like the plan, the service plan, the offerings, then probably I'll take a follow-up question from there.
Yeah, so we don't have any other questions from our investors today. So I think Ivan has frozen again on the screen. So you can share the pitch deck to the investors later after this call. Thank you so much. It was a great presentation. Don't worry, it's a little bit of technical glitches here and there. Great. Let's take some closing remarks for the show today. Okay, I'm going to start with Salish. So what advice do you have for early stage startups who are looking for seed funding?
I think frank advice would be, they should come out with a real painkiller in the form of problem-solving statement for enterprises. And ideally, they should strive for a sort of a J-curve growth in their projections. It should not be a lifestyle business.
Oh, wow. I love that. Okay, next I have Devang.
Yeah, so I think they're slowly coming out of COVID. Large parts of the world are getting vaccinated. So I think But I always, even through the pandemic, I've always encouraged people, you stick to first principles. They never fail in life. You need to have a good team, a good product, something that differentiates you from competitors, and a good way of addressing that market. And everything has to be thought through well. I think the, the last, this last phrase is really the most important thing. You need to think through every aspect of a business, so that when you go into a meeting with an investor, you might not have the market right, you might not have the everything down to the second decimal point, but as long as you think through what you're doing, as long as you're the right team to do it, and as long as you have the right numbers to back up how you're going to do it, you will be in contention for funding. But uh, try and do any one of those three or four things wrong, and it'll be very hard to get funded. So just stick to first principles and stick to them steadfastly.
Right. Great points there, Devang. Michelle?
I guess I would like to bring out the team on focus, right? So not just for the founders to focus on doing one thing, but also when it comes to the product or service offering, be more focused in the target segment that they're looking into. So I give an example where Ivan Abibi, right? Sorry if I pronounce it correctly. So maybe focus on the SMEs as a start. Pilot it through, get to understand the customer a little bit more before you move on to the corporations, whereby the sales cycle is different. So it allows investors to visualize better in terms of your product roadmap and your offerings, pricing strategies as well. Yeah.
Great. So that was for you, Ivan. Thank you so much, Michelle.
Yuan, it's okay. We're back.
Yuan, for you,
No?
what is the closing remarks?
Okay, the first one is select your investors. I know people are looking to raise for various reasons, but you need to do appropriate due diligence on your investor, because your cap table is very, very important. Whoever you have in your cap table can determine how far you go. Interestingly, I read a story this morning of a startup that is suing an investor because the investor took his IP and invested in that business and built a business that became a competition. So
Wow.
whoever is on your cap table is very, very important. Secondly, it's not about the size of the round. It's about what else the investor is bringing to the table. So look beyond capital. Capital is very important, but look beyond that. What else is the investor bringing? Aggressive capital, we do way more than bringing capital. We give you access to new markets. We give you access to industry experts, because we know that money is just one bit of building a successful startup. Then thirdly, avoid the valuation craze, right? We're in that valuation craze. Somebody just comes with an idea and says, hey, I'm valuing this at 10 million, but you don't have an MVP. You don't have anything to show for it. So you have to be very careful, because if you raise at a certain valuation, you basically want to avoid a down round, struggling to keep up with that valuation at the end of the day. And I guess lastly, speak to your customers always. Always be in touch with them, because they're the ones that determine if your business is going to be successful or not. That's the only way you can build a sticky business, if you're listening to your customers and giving them value the way that they're willing to pay for it, right? So it's very, very, very important. That's what I have to say.
Thank you so much for the closing remarks, Ivan. Next, I have Rishabh.
Yeah. So first of all, I really agreed with each and every point with what OM mentioned. It's exactly what I wanted to say. So I'll not take another. Being the last in the panel always helps you to speak less and not elaborate a lot. Thank you, OM, for that. So, but just one point that which I think might have been missed out, or I would like to articulate. Believe in the product you're building. First of all, convince yourself before you're going to an investor meeting that this is the product that you believe it will be the unicorn or decacorn, whatever it is for tomorrow. Even though you're not at a stage where you're not even making revenue, but still have a belief. Because a lot of times I've seen that when you're meeting these startups, their market opportunity would be in billions of dollars or sometimes even in trillions of dollars. But you ask 3 questions to them and they're shattered. They're like, we think it might happen. This might happen. If this happens, then this. So the belief is, it start getting visible that they're not very sure about themselves. So even if you're in your market opportunity, your writing is in thousands of dollars, but your belief is that strong that you can capture that 100% of it, will convince the investor that yes, he's ready to be on your side to go for the long journey. Secondly, identify the right investors. Do not just fall in trap of capital. Raising capital is the most easiest job for for any startup. And to be very honest, in my entire journey as an investor, working in investment ecosystem, I realized that raising funds is just 1% of that 100% of the circle. The 99% is still left. So identify those investors who can help you to get the 99% rather than just being with you for that 1%. So this is what I believe is important for the seed stage startups. And thank you for having me here again, Sony. It was
Thank you,
great having
Rishabh.
you.
And Dubai looks beautiful.
It is undoubtedly.
Great. Gary, over to you. The closing remarks, please.
Yeah, sure. So make sure you do your customer development. You got to make sure that the product or service that you have, that people really want to buy it. One of the things that I did with my partner David Yang on Abby on Eva was basically we went out and interviewed almost 100 people. We would walk down the street in Palo Alto, sit down at cafes, have coffee, tea with folks, and figure out what they wanted. This is at the stage that we actually created the company. So we would get their opinion, and we'd keep reiterating because customer development is critically important. What happens a lot of times, you'll get technical founders that keep building a product and then put themselves out of business. So that's door number one. The other thing I want to make sure that the investors, I think, who said it? Devang, I think, said it. But having smart investors, because you're going to be married to these investors for some time, and you want to make sure that, and especially if they're on your board, that they're smart and can give you good ideas and really help your company move forward. So that's door number two. And the third thing is passion. As I said, being optimistic, and because it's not easy. Doing a startup is not easy. There's ups and downs and ins and outs, and you got to have founders that support each other. You got to have investors that support the founders. So having that positive attitude to get stuff done, because if you pivot enough, you're going to find the right fit. So have people that are flexible, that understand that pivoting can be an important part of building a startup.
Great. Thank you so much, Gary. Thanks for that. Okay, I've lost Ivan now. So great. Thank you so much for the show and for the insights. Really great feedback. I would say Ivan probably can see the recording later and learn from the feedback that was given from the investor community today. Thank you so much for your participation. I'm back tomorrow again on VCTV on another topic and another set of speakers to share knowledge and insights. Till then, stay safe, stay connected. I'm going to see you again. Bye-bye. Take care. Bye.
Thank you.
Thank you.